Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Kemper Corporation Annual Report. Kemper Corporation offers a wide range of insurance products and services through two primary segments: specialty property and casualty insurance and life insurance. The specialty property and casualty insurance segment provides specialty personal automobile and commercial automobile insurance to customers. This includes various types of coverage for individuals and businesses, such as liability, collision, and comprehensive insurance. In addition to property and casualty insurance, Kemper's life insurance segment offers individual life, accident, supplemental health, and property insurance. These services provide financial protection and security to policyholders in the event of unexpected events or losses. Overall, Kemper Corporation provides a diverse range of insurance products and services to meet the needs of individuals and businesses across the United States. Unfortunately, I don't have access to the text you provided. However, I can still provide a general essay on what might cause a stock price to crash. The sudden and drastic decline of a company's stock price is often a result of a combination of factors. One major reason could be poor financial performance, such as declining revenue or increased debt. This can lead to a loss of investor confidence, causing the stock price to plummet. Another possible cause is negative news or announcements from the company itself. For instance, if a company announces significant layoffs, restructuring plans, or a major product recall, it can send shockwaves through the market and lead to a sharp decline in stock value. Additionally, external factors such as changes in industry trends, regulatory issues, or global economic downturns can also contribute to a stock price crash. If a company is heavily reliant on a specific market or sector that is experiencing difficulties, its stock price may suffer accordingly. Lastly, investor sentiment and market psychology can play a significant role in determining the stock price. A sudden shift in investor attitudes or a change in market trends can cause a stock's value to drop rapidly. In summary, a company's stock price crash can be attributed to a variety of factors, including poor financial performance, negative news, external market conditions, and changes in investor sentiment. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through a review of the company's financial performance. On the growth side, the specialty property and casualty insurance segment has been a significant contributor, driven by rate increases and higher commercial automobile volumes. Additionally, the life insurance segment has seen growth due to amortized premium revenue in proportion to insurance in force. The net realized investment gains, losses, have also had an impact on revenue, with gains of $5.5 million in 2025 and $13.2 million in 2024, but a loss of -$18.6 million in 2023. Purchases of securities have also contributed to growth, totaling $124.2 million. On the decline side, the specialty property and casualty insurance segment has seen a decrease in revenue from -$57.1 million in 2023 to $187.1 million in 2025. The life insurance segment has also experienced a decline, with a decrease of $51.8 million in 2023 to $68.5 million in 2024. Net realized investment gains, losses, have had a negative impact on revenue, with a loss of -$14.7 million in 2023. Other drivers of revenue growth or decline include acquisitions and dispositions of companies, changes in estimates for reserves, and net investment income. These factors can have a significant impact on the company's overall revenue performance. The net income of a company underwent significant fluctuations between 2023 and 2025. Initially, it decreased from $317.8 million in 2024 to $143.3 million in 2025. However, this decline was partially offset by an increase of $130.3 million due to changes in the carrying value of equity securities. Furthermore, net income improved from a loss of -$272.1 million in 2023 to $143.3 million in 2025. Profit margins also experienced a downturn between 2024 and 2025. The overall profit margin decreased from 6.7% in 2024 to 2.8% in 2025. This decline was observed across various segments, including specialty property and casualty insurance, which saw its profit margin decrease from 9.9% in 2024 to 4.5% in 2025. In contrast, life insurance maintained relatively stable profit margins, increasing slightly from 8.9% in 2024 to 11.7% in 2025. The reasons behind these changes are multifaceted. Increased operating costs, reduced profitability, regulatory changes, cybersecurity concerns, and industry practices all contributed to the decline in net income and profit margins. However, certain factors also led to an improvement in these metrics. For instance, the payment of subsidiary dividends to Kemper suggests that its insurance subsidiaries experienced increased profit margins. Additionally, favorable developments in loss and LAE reserves helped boost net income and profit margins. The company's financial performance indicates a significant improvement in its ability to generate cash from operations. The net cash provided by operating activities has increased substantially, from $382.9 million in 2024 to $584.5 million in 2025. This increase suggests that the company is becoming more efficient in managing its day-to-day operations and generating cash flow. The positive trend in operating cash flow is a significant indicator of the company's financial health. It implies that the company has sufficient liquidity to meet its short-term obligations, invest in growth initiatives, and return value to shareholders through dividends or share buybacks. Overall, the data suggests that the company is on a solid footing financially, with a strong ability to generate cash from operations. The financial performance of various segments and regions within a company has been analyzed. In terms of segments, Specialty Property and Casualty Insurance segment stood out for its revenue growth in 2025 compared to the previous year. This segment saw an increase in earned premiums from $3,632.5 million in 2023 to $4,145.8 million in 2025. The life insurance segment also performed well, with stable earned premiums. On the other hand, non-core operations was a segment that underperformed, experiencing a significant decline in revenue and earned premiums. In contrast to Specialty Property and Casualty Insurance segment, non-core operations saw a decrease in earned premiums from $509.3 million in 2023 to $77.2 million in 2025. Regionally, California emerged as a strong performer, accounting for 63% of the Specialty Property and Casualty Insurance segment's premium revenues in 2025. Florida and Texas also contributed significantly to this segment's revenue, with 16% and 11%, respectively. Unfortunately, there is no information provided on regions that performed poorly. The company's management is optimistic about its outlook and has outlined several key strategies to drive growth and improve profitability. A major focus area is growth through organic initiatives and strategic acquisitions, which will enable the company to expand its business and increase revenue. To support this growth, the company will continue to invest in information technology to enhance operational efficiency and customer experience. In addition to driving growth, management aims to achieve operational and organizational efficiencies through restructuring charges and cost-saving initiatives. This will help reduce expenses and improve profitability. The company has already completed several strategic initiatives that have resulted in reduced expenses, and it plans to continue share repurchases under its existing authorization. Furthermore, the company will maintain its quarterly dividend payments of $0.32 per common share. Management is also focused on maintaining sufficient liquidity to meet its obligations, including through the use of short-term FHLB borrowings. The company manages its interest rate exposures by investing primarily in investment-grade securities of moderate effective duration. Overall, the company's strategy appears to be well-rounded and aimed at driving growth while prioritizing operational efficiency, liquidity, and risk management. The company has made several significant acquisitions and divestitures over the years. In terms of acquisitions, the company acquired control of Kemper's insurance subsidiaries, which gave them a 10% or more ownership interest. Additionally, they entered into ultra-long Treasury futures in the fourth quarter of 2025 and Treasury locks in both the fourth quarter of 2016 and first quarter of 2022. On the other hand, the company has also made several divestitures. One notable example is the sale of their preferred property and casualty insurance business due to impairment. Furthermore, they had unsettled sales of investments in equity securities at fair value amounting to $0.2 million as of December 31, 2025, and $0.3 million as of December 31, 2024. Kemper Corporation has a history of rewarding its shareholders through both dividend payments and share buybacks. In terms of dividends, the company has consistently paid out to its shareholders, with quarterly payouts of $0.32 in 2025 and $0.31 in 2024. The total dividends paid by Kemper Corporation have remained relatively stable over the past 3 years, ranging from $79.6 million to $80.1 million. In addition to dividend payments, Kemper Corporation has also been actively buying back its shares. In 2025 alone, the company repurchased and retired a significant number of shares, totaling 1,655,662 in October. The remaining share repurchase authorization, as of December 31, 2025, stood at $304.2 million, indicating that the company still has a substantial amount available for future buybacks. Overall, Kemper Corporation's commitment to returning value to its shareholders through both dividend payments and share buybacks is evident from its financial reports. That concludes the financial summary for Kemper Corporation. Feel free to comment below, and I will be happy to answer them when possible.